Hi, everyone. Welcome to Gate Pass's latest edition of Market Monday. This past weekend is probably one of my most favorite weekends in sports with the NFL season kicking off and then the finals for the US Open in tennis. It really doesn't get much better than that. Now, looking at the markets, let's hope this week is a lot better than last week as September started off in line with historical seasonality, trading down all 4 days last week. As we alluded to on last week's episode, historically, September is the weakest period of the year for stocks. And given that we had one of the best starts to an election year, we wouldn't be surprised if we saw some sort of seasonality or pre-election jitters kick in for the next 2 months. Speaking of the election, we're heading down the home stretch right now with presidential debates kicking off this week, as well as early voting in North Carolina, which is an important swing state. So anywhere you look right now, you're starting to see a lot of campaign promises and things are heating up. But from an investor standpoint, it's very important to determine a lot of the rhetoric that you're seeing is really just to capture a lot of eyes and attention. And at the end of the day, politics don't matter much for your portfolio if you're investing to build long-term wealth. And the data to support that is very clear. We had both economic crises and economic booms with both Republican and Democratic administrations, right? So while politics are not material to your portfolio, policy is very important. And I'm sure you've seen a lot of the policy proposals and the headlines coming out most recently, and a lot of them seem off the cuff and without a lot of practical implementation. But that's another thing that is very important to delineate what actually has a chance to stand in Congress. And one of the things that we track here is the betting markets, because that allows us to see what the collective is actually thinking and where they stand on certain issues, right? So if you look at Polymarket, which is the world's largest predicting site, right now they're showing around a 63% chance that the Democrats win the House, and then a 72% chance that the Republicans win the Senate, right? And so if these statistics hold true, we probably end up with another split government in DC, and a lot of the policies and headlines that you're seeing will end up in a filibuster. So before we start making irrational decisions, it's probably better to wait and see really what happens and what gets through Congress before you start making personal changes. So what we're really most focused on for the election and then going into 2025 is around tax policy. And as you know, tax policy affects everyone. It affects the largest multinational companies all the way to every individual in America, like yourself and me. And if you recall, back in 2017, Donald Trump signed in the Tax Cuts and Jobs Act, which essentially cut both corporate and individual taxes. However, the corporate taxes at the time were permanent, and then the individual taxes were set to expire at the end of 25. So if these do not get extended, we will start to see taxes go up for all Americans in 2026. So what does that mean for your pocketbook? I mean, right now, like I said, both candidates have vastly different tax policies. So right now we're kind of in a holding pattern to wait and see who gets elected. But it's really important to understand that there are some things on the table right now, both for individual tax treatments as well as tax credits that could have a meaningful impact both to your net income as well as to your portfolio. And at the end of the day, policies aren't really going to have a material impact on the economy, but they can have a very material impact on your personal situation. So it's very important to pay attention to really how these policies shake out over the next few months. Now, looking ahead, we're really focused on now until September 18th, which is the Fed meeting, and we should probably see some type of color around the trajectory of rate cuts and how much they're going to be cutting rates. So this week we have a very important inflation number coming out. And then if you look at September 17th, we're going to get retail sales. So those are probably the two most important data points that we're looking at. And then this past week, we saw the growth of employment in the jobs report continuing to slow. So I think the culmination of those three reports will be enough to really let the Fed know if they're going to cut 25 or 50 basis points. But I think it's pretty certain that we're at least going to get some type of rate cut here on September 18th. That's it for this week. Thanks again for tuning in, and we look forward to seeing everybody next week. Have a great week ahead.